Hi, I'm Zach Pandl from the research team at Grayscale Investments, and I'm here to give you a rundown on the last month in crypto. Crypto markets performed very well in September 2024, and while Bitcoin led crypto markets year to date, this month the gains were led by other market segments. On September 18th, the Federal Reserve cut interest rates by 0.5% on the back of lower inflation and signs that the labor market is beginning to loosen. This caused a number of changes across asset markets, including a rise in the price of gold, good performance for U.S. Treasury bonds, and weakness in the value of the U.S. dollar. Crypto markets performed well on a risk-adjusted basis. Our crypto sector's framework shows that altcoins, or lower market cap tokens beyond Bitcoin and Ethereum, led markets in September. One of the best performing market segments was the utilities and services crypto sector, which is where many of the tokens related to artificial intelligence or AI tokens are located. There's been lots of debate this year about Ethereum, the second largest asset in our markets by market capitalization. Ethereum has underperformed Bitcoin this year, and the ETH-BTC price ratio reached a new low for the cycle in mid-September. It's important to remember, however, that Bitcoin and Ethereum are in different crypto sectors or different market segments. Bitcoin dominates the currencies crypto sector, while Ethereum is the leader in the smart contract platforms crypto sector. And while Ethereum has faced new competition within the smart contract platforms crypto sector, its share of total market capitalization has remained above 60% since 2020. For much more detail on Ethereum and competition within the smart contract platforms crypto sector, please see grayscale.com/research. During the month of September, we also saw encouraging signs of institutional adoption for the crypto asset class here in the United States. First, press reports indicated that Bank of New York, the oldest bank in the United States, could begin to offer custody services for digital assets. Second, we saw preliminary progress on regulatory approval for options on the spot Bitcoin exchange-traded products. However, it's important to keep in mind that this is a multi-stage process, and it could be some time before these products are available for U.S. investors. The crypto industry also continued to feature in the U.S. presidential election race. Former President Trump announced his own decentralized finance lending protocol based on Aave technology, while Vice President Harris made positive comments about digital assets and blockchain technology. Perhaps reflecting more bipartisan support for the industry, the correlation we had observed between former President Trump's probability of winning the election and the price of Bitcoin has begun to break down. Nonetheless, we continue to see the U.S. election as an important risk event for crypto markets. The first consideration is whether we have unified or divided government. Both parties, while having unified government, have expanded budget deficits and increased the national debt, so we think that that would be likely again under a unified government scenario. However, there are other issues at stake, including regulation of the digital assets industry, as well as uncertainties caused by policies like tariffs. Putting the election uncertainty aside, however, we continue to see a broadly favorable outlook for our asset class. The macro backdrop seems supportive. We have a soft landing for the U.S. economy, and the Federal Reserve has begun to cut rates. In addition, we think the crypto asset class will be supported by a variety of adoption trends, including for stablecoins and prediction markets. Thanks for listening, and we'll see you next month.